This video is for business owners who need to charge sales tax and are using FreshBooks as their bookkeeping software. Here's a breakdown of what you're going to learn in this video. First, you're going to learn how to find out exactly how much sales tax you need to be collecting for your business and your geographic location. Next, you're going to learn how to set up sales tax rates on the items and services that you sell and how to even set up different rates if you have different tax rates that you have to charge for different types of clients. Then you're going to learn how to create your invoices so that sales tax is charged on that invoice, so that sales tax is applied. You're going to learn how to find the report in FreshBooks to know how much to remit to your local tax jurisdictions. And then you're going to learn how to properly record it in FreshBooks after you've paid your sales tax bills that are due to the jurisdiction where it belongs, your city, your state, your county, wherever. And for those of you who stick around to the end, I'm going to end with a couple of major mistakes that I see business owners make when it comes to sales tax that can get them in a lot of trouble. So I hope you stay till the end. All right, let's dive in. So the first step is to understand what you even need to be charging for sales tax, or if you should be charging sales tax. I said I would tell you how to find out how much you need to remit. And well, my best advice is to pick up the phone and call your state and county and city revenue offices and just tell them what you're doing and get them to give you the exact instructions. You'll feel a lot better after you've had that conversation with someone who has been working in the government role for years and they're expert at that particular state law. So while you're on the phone, tell the person that you're talking to that you're taking notes because you want to get this exactly right, and just document the date and that you talked to them and the name of the person and write down exactly what they said. Save it on your computer. That's how I would try to get my sales tax rates. And then the next step that I would take is to find a mentor or a business friend who does a similar type of work to you. Take him or her to lunch, because you need to be taking mentors to lunch anyway, and bring up this topic and make sure it jives with what that state person told you. And that's exactly how I would handle it if I had to collect sales tax. All right, so you've determined that you do need to charge sales tax and what rates to charge for different things. So now the next step is to assign that sales tax rate to your items or services in FreshBooks. It's very important that you understand how to use items and services in FreshBooks. A lot of users don't know how to do this properly. They come into FreshBooks, they hit new invoice, and what do? They just start typing right here, not a good place to put an item. And they hit enter, and maybe they put the price over here, $50. And what you did was you just created an item for that very specific thing that you wrote. And now that's in your items list, and this is not the way to do it. So let's think about how to do this the right way. You need to consciously think of the list of things that you sell and add them in FreshBooks. You're going to come to your gear icon here, y'all, and you're going to go to items and services. Here we are. You got services, you got items. Now, you can create a new item. Come on, create new item. You can enter the name of what you sell. And then here's the important thing. You can add taxes to it. But if this particular item gets county tax and local tax, you can click those. And so then when you're in your invoice and you type this specific item, it's going to bring over this sales tax rate. If you do need to add another sales tax item, you will come here into create the new item. You're going to add another tax and you will name it. Now, when you do that, it's going to create a liability account in your balance sheet for this name. Here, I can show you that. I got the chart of accounts open and I'm in the liability section. You can see right here. And all these taxes payable have been created in the chart of accounts. By the way, I have a full video on items and services in FreshBooks, and it should be popping up right now, but if not, it'll for sure be linked below. So watch that video after you watch this. You're going to learn a lot about how FreshBooks treats these two different categories. All right, so let's move on how to create your invoices so that sales tax is charged. Let's go to new invoice here. Let's add a client, Testy McTesterson. We're going to add a line that I know has a sales tax on it. 5 cups of vanilla ice cream, HST. That's something that Canada charges, but if we can click that open and look, here is all the taxes that can be applied. And on this particular instance, this item was already identified as having the 13% HST. If you ever needed to edit on the fly, you could do this. Here's an example. I have a client, he's a mobile welder, and for him, farm sales tax is different than regular commercial sales tax or personal sales tax. So when he goes and does a job for a farmer on their tractor, he can change the rate of his service and make it for, farm sales tax. So some of you might have multiple tax rates that you can charge. And he points out it's a really good selling point because the amount that the customer's going to have to pay is less by him knowing that there are different tax rates for the stuff that he does, depending on what kind of client he's serving. Let's go ahead and just scroll down and see exactly what's happening. Here we've got $50 of the ice cream, 13 of HST. Woo, Canada. And the client is going to see that they owe $56.50 right here. Your revenue is $50, but the amount collected is $56.50. All right, now let's look and see how much is owed. I came to reports over here, scroll down, and we got sales tax summary here. And what do I need to do? My filter, I'm going to put for this year. You can change it to quarters. You might owe sales tax monthly, quarterly, semi-annually, depending on whether your state requires that you pay on accrual or cash basis. You can change it. And $19.50. So I had created a different invoice for $100. It had some sales tax, and then y'all saw me create the one for $50. And so I know that I need to send the state $19.50. This $19.50 should be sitting in your bank account. This is the number that you've actually collected. Even though you had cash come into your bank account, it was not yours. You were just holding it for the state. Another way to think of this is the same number that's sitting on your balance sheet as the liability for each one of these sales tax rates. In this example, we only applied HST, but if we had applied a couple of different ones, the report would be more thorough and have several more sections. So you're going to come up here, more actions. You would hit print and then change the print settings to save as a PDF and save it in your hard drive. So now we need to talk about how to properly record it in FreshBooks after you've paid your sales tax bills. It's going to get interesting. This is the hard part. So you come to bank reconciliation. In this demo account, they do have some transactions. Now, none of these are actual sales tax transactions, but what if we say that $700 was what was owed to the government? And we knew that because we ran our sales tax report, and this is what it said that we owed. So we wrote the check, or we went to the online portal, and we sent the money. We have money flowing out of our account. Now, all this is assuming that your bank is connected, y'all. This is a critical point because I think people need to have their banks connected to FreshBooks because that's how it works most efficiently. And so remember, what happens when money goes out of the checking account or any account? The default position that FreshBooks takes is to first record that as an expense. So, if this really was your sales tax payment, it's going to be sitting as an uncategorized expense because FreshBooks isn't even going to have a clue of what it was. And it's going to be sitting there until it's classified otherwise. But you can't record it as an expense because this is not an expense. It is a reduction in the liability, clearing the liability off your balance sheet. And so in order to do that, you have to be here in the bank reconciliation screen and deal with it from here. Now, unfortunately, I would love for this to be able to have a button here where we could say, send to that liability account, but we do not. All we have is transfer or owner's equity. And if you think about it, when you think about transfer, you probably think, you should be thinking that that's transfer from like credit card to checking or from checking to savings. And you mark from both bank reconciliations of those both accounts, you mark them both as transfers, and it clears out your petty cash. And you typically won't think about this as a transfer, but you have to in this instance. And then you have to kind of hack it from there with a journal entry. So by marking it as a transfer, it's doing the first step. It is moving it out of petty cash and it's assigning this to this account. That's what transfer does. It moves it from petty cash, which again is not petty cash like your grandma thought of it with a little drawer of cash. Petty cash is just a poorly named account that FreshBooks has, and it just sits there until you assign it to the savings account. But then we have to do the other side too. So you're going to mark the $700 sales tax payment as a transfer. And the next step is a journal entry. So the date was 10/17/2022, $700. So you come to your chart of accounts, be up at the top, new journal entry. Here, you're going to write Q4 sales tax. And we said it was, sometime in October. See, I forgot. You got to be very detailed, y'all. Get that right. And then we have to clear the liability. So the liability is sitting with a credit balance, the right side of the T account, and we need to take that down to zero. So we would pick our HST account right here. Uh-oh, I see that they have HST as an operating expense. Don't do that. You'd pick this one, and we would put $700 right here. And then this other account is going to be petty cash. Okay? Because we have to have our petty cash always being left, right as the ping pong ball. And this is going to put that $700 on the other side. So it balances out to zero because we're always clearing our petty cash out to zero. So HST top line 700, petty cash, credit. I like my debits on top of my credits for $700. You see that they match. Also, if you are at all unsure about this, please reach out. This is hard stuff. Look, they even have a warning up here. Journal entries cannot be deleted. I've got another journal entry video. You can search my channel for the word journal entries to get a lot of advice about how to do journal entries and pitfalls to avoid. Ooh, one other quick thing to note. Let's say that you had $500 of HST and $200 of another account. But you sent it in one payment. You can add a line here, and this could have been 500. This could have been 200 down here, and the total of 700. That might be something that you have to do. In the case of my client who had the regular sales tax and then the farm sales tax, that's what he would have to do if he sends one check to the state of Mississippi. And y'all, FreshBooks developers are working very hard, and soon we're going to have a lot more robustness to that balance sheet. I'm certain of it. I'm recording this video in January of 2023, so if you're watching it much longer after that, you might want to comment below to see if there have been any updates or search my channel, because FreshBooks is changing pretty quickly. All right, so you're several minutes into this video about an obscure bookkeeping topic on a very specific bookkeeping software. If you've watched this far, the best thing you can do today is to hit the subscribe button to this channel. I make FreshBooks videos, and the fact that you're even hearing the words out of my mouth right now, it means that you use FreshBooks. All right, so let's move on to the mistakes I see regarding sales taxes in FreshBooks. I've got 3 to share. First, you need to assess whether FreshBooks is the right tool for you. Should you even be using FreshBooks? We all are used to paying sales tax on like retail items that you can touch, you know? I mean, if you're primarily a retail business with inventory, you should not be using FreshBooks. But states usually do call their tax departments like the sales and use tax. So you can think of FreshBooks as a better fit for the businesses who are really more collecting like use taxes than sales taxes. FreshBooks is primarily for service providers. Please remember that. So that's your first warning. Make sure you're using the right tool for your type of business. If you have inventory and tangible products, you're in the wrong bookkeeping software. The next problem is that when the business doesn't have strong bookkeeping, the default way they manage their business is with money in their checking account. And that's really bad, because if you are collecting sales tax, that bank account might be yours, but some of that money in the account is not yours. So if sales tax is a significant part of your business, you could use your sales tax report weekly or every 2 weeks, maybe once a month, run your report and move the money to a business savings account, and you don't touch it. It's hard to get your head around, but don't get excited when money comes into your bank account thinking you made all this money when a significant percentage of it is not yours to keep. There are way too many sad examples of people using the state sales tax money to pay their payroll. Don't let that be you. And lastly, if you're doing invoicing outside of FreshBooks, things are going to get complicated really quickly. So what's happening? So maybe 80% of your transactions are billed via invoices that you create in FreshBooks. But then you start to go on the hunt for lower processing fees, or your friend tells you about some great invoicing software that you should try out, and you use it, and you collect payments for work that you do from that other platform. And so you have some services that you sell, maybe it costs $100, and it should have had $5 of taxes on it. And so we're going to have to rebuild that full invoice that you build in a different software inside of FreshBooks if you want your sales tax report to be accurate and not having to look in multiple places to get your totals. It will start to get really confusing really fast if your motivation for doing it is because you're trying to save a couple of fractions of a percentage point on processing fees or something like that. Don't step over dollars to pick up those pennies, y'all, because you're going to be spending your Saturday nights dealing with sales tax that has been recorded in multiple different platforms. One of my main guiding principles is the KISS principle. If you've watched my other videos, you've heard me say it. Keep it simple, silly. Keep it super simple. You'll thank me later. All right, I hope this video was helpful. Please reach out if you have any questions about your FreshBooks account. I'm Kate Josephine Johnson, and I help businesses build their business legacy.